know, after 2008, people were saying, Kris, this is the wrong time to be investing in real estate. I'm like, you're so wrong. And then history proved me right. It literally was the best time for you to be buying real estate in 09, 010, 11, 12, 13. I know because I helped my partners and investors make over $100 million. And you're doing it again. You're like, oh, interest rates are really high, like timing's probably off. I'm like, okay, then you clearly do not understand buying real estate and why you should always be buying it. Let's cover that right now. Check it out. In this video, we're gonna talk about three things. Number one, why you should always be buying real estate. Number two, why interest rates shouldn't keep you from buying real estate. And three, why timing the market in real estate is dumb. Now I'm gonna tell you right now that I've been buying as much real estate as I know how, starting over 20 years ago, still to this day. And notice that we went through the Great Recession of 2008, and a lot of people screamed, this is like the worst of times. I'm like, oh my gosh, this is like the best of times. And then we had this thing called a pandemic. You shouldn't do that. I'm like, oh, that was the best of times too. And now we have these interest rates and we're going into an election year. People are like, oh no, you should wait. I'm like, guys, this is the right time to be in the game. So what I want to do right now is I want to talk about 6 major reasons why you actually want to always be buying real estate, as in right now. Here's the first one. Cash flow. If you buy the right kind of real estate in the right market, then whether the market is up or down, guess what it does? It just gives you money every month, but you really don't have to work for it if you have it set up the right way. This positive cash flow is also sometimes called passive income, and it's because you don't actively have to work for it. When you get a job, you literally have to get your butt out of bed, you gotta get in your car, you gotta drive somewhere, then you have to perform and do work. You're basically doing active activities, and then every other week you get a paycheck. In real estate, when you own it on a buy and hold, you're actually earning passive income. As in, like, the first rental property that I ever bought paid me $600 every month. Literally, the house managed itself. I did this thing called a lease option so that I didn't even have to like take repair calls or anything like that. I literally just received $600 every month. I didn't have to spend more time to get that money. That money just came in automatically. Now, it is important to note that maybe real estate currently is not your strategy because maybe you're doing a different one like a 401k or the stock market or an IRA. But I want to ask you, does your 401k write you a check every month? Does your IRA or your stock portfolio write you a check every month? It doesn't. It doesn't have that component. It's not paying you the way real estate does. That's a pretty significant difference. Strangely, I did not need the other 5 reasons for me and my wife to start buying real estate in our early 20s. The reason why I wanted to buy 25 homes is because they were each paying me about $500 a month of passive income, which with 25 of them was $12,500 a month. Which meant that when I graduated college and all my buddies were going to start their jobs, my 25 homes paid me a nice steady 6-figure income and I didn't have to get a job. The second reason why you should always be buying real estate is because real estate goes up in value, and that, my friend, is called appreciation. And while it's true that it actually can go down in value, the reality is that real estate has these long tail upwinds. And if you look at where we're at in the market cycle, we can look at the last 65 years. Check out this chart. It's crazy. Real estate, for the most part, just continues to climb. Why? Because it's an asset that increases in value over time. There's another reason, though, why in years past it's going up a lot more than usual. It's because we're missing millions of homes, and the builders can't build the missing millions of homes fast enough. And it means that it's creating this crunch on supply and demand. And so people are willing to pay a higher price to get the real estate that's available because there's not enough out there. And so not only is the home going up in value, but remember cash flow? Well, that cash flow also increases year over year over year. Now, if you're watching this video and you're like, Kris, I kind of know this, man. Like, I've owned a home for the last 5 years. And you're right, during the pandemic, like my house went up like $100,000. Yeah, just imagine if you had 9 more houses, then you'd be a millionaire. The third reason why you always want to be buying real estate is there is an organization out there that will give you most of the money that you need to buy real estate, like on an ongoing basis. And they're called banks, and they love lending money on real estate. They don't like to own it, but they love it when you do. Now, this is actually really important because it gives you the opportunity for leverage. If this house costs $300,000, I don't need $300,000 to buy it. If I'm gonna move into it, I might need a 3% down payment, which is like $10,000. Or if I wanna buy it to rent out to somebody else, I would need a 20% down payment. So maybe that's $60,000. The point is that the bank puts up most of the money. And the reason why this is important is that when that house goes up in value, your small portion you put down goes up in value, but the bank put up the rest of the money, and that greater portion goes up even more in value, which means that you're actually making money on the bank's money instead of your own. The fourth reason why you want to keep buying real estate, tax benefits. Like, let me just ask you, do you feel like you pay too much in taxes? Because if you do, you just don't own enough real estate. Real estate investors enjoy tax benefits such as depreciation, mortgage interest deductions, and property tax deductions, as well as real estate's a business. So you can actually write off all the other stuff like I use my cell phone for my business, or I got in my car and I drove for my business, or I took a trip to go look at a property. All of those things become write-offs. But on top of that, someday you're gonna sell this property and you're gonna make a ton of money. And when you do, you don't have to pay taxes on that either. You can either keep the property and do a tax-deferred refinance so that you can use that money to buy more property while keeping the asset, or sell it, but do what's called a 1031 exchange, where you're just gonna transfer the profit into more properties and the government says, we'll defer that tax as well. And there are families that will defer for generations, which means that all of the money that they're making and all the cash flow is tax-free. If you wanna know how, there's a video right here on how to never pay taxes again. The fifth reason why you always want to be buying real estate is that it is a tangible asset that you control. You see, unlike stocks where you have no control over those companies and their decisions, real estate gives you direct control. You can improve the property, you can raise rents, you can enhance its value, you can sell it if you want. And on top of that, real estate tends to keep pace with inflation, which is really weird. In the last few years where we've had really high inflation, guess what real estate has done? It's gone up even higher because inflation is good for hard tangible assets. It's kind of bad for your 401k, IRA, and other soft assets. And obviously, as prices rise, so do rental incomes and property values. Hence, you're winning by controlling this asset. And the more real estate you control, the more tangible assets you have, the bigger you win. Lastly, number 6 is you always want to be buying real estate because it builds long-term wealth. Literally, you can make 27 times more money than a 401k or IRA. And why is this important? Take a look at the average 401k balance at 65 years old. It's $272,000. And yet the average American thinks that they actually need $1.3 million to retire. And Forbes says that if you wanted to retire just on $100K a year, you would need $3.1 million. So why would you keep putting money in a plan like a 401k that you know will never be enough? That's weird. You should buy more real estate. And I get it, a lot of you don't want to invest right now because of interest rates. This is one of the biggest reasons why people are not investing in real estate. It's the interest rates, the other one is timing the market. But let's talk about interest rates. We got used to, after the 2008 crisis, these super low interest rates, like, oh, I'd totally buy a house at a 3% interest rate, but not at 7 or 8 or 9. And I'm like, do you understand that the interest rate has actually a very tiny impact on the overall ROI? People get so caught up in this idea of like, well, if I buy an investment property and if I have a higher rate, then all of a sudden my payment's gonna be a couple $100 more a month, and that's gotta ruin the strategy. But the reality is that actually gets passed on to the renter, because guess what's also increased? The rents. Strangely, I'm actually producing a higher ROI in this climate with higher interest rates than years earlier when we had low interest rates. Why? Because of that supply-demand issue that I was telling you about. It's gonna take about a decade to resolve it, which means for the next 10 years, you're gonna see real estate continue to increase its prices at an unprecedented rate, and people are gonna look at the interest rates and say, well, I'll only participate if rates come down. I'm like, no, actually, you're gonna make more money with higher rates than lower rates. By the way, in 1981, did you know that interest rates literally hit 20%? And real estate still made sense if you knew how to adapt with your strategy. But really, from 1970 to 2023, look at this chart. It's showing that the average Fed rate has actually been 5.4%. So right now, our rate's technically a little bit higher than that. They are. Is it a deal killer? 100% no. It really is only 2009 and on that marked these super low interest rates. And the government basically did that to pull us out of a recession. They said, okay, we got to stimulate the economy. If rates are low enough and people buy real estate, this is going to help move the economy. And you know what? It did. And that brings us to the second and final reason why people are still stalling out and not getting involved in the real estate game. It's because they're talking about timing in the market. They're like, interest rates are really high, we should wait for those to come down. I'm like, why am I earning my highest ROIs right now? It's because interest rates, again, are only a small part of producing an overall ROI. The rest of the ROI comes from the right location. It comes from getting a discount or buying a property at the right price. It comes from rents coming up and buying in the area where you're gonna see the greatest appreciation. And right now, all of those things are making me way more money than this conversation on interest rates. And so timing the market is kind of a silly game. It's more about time in the market, as in the longer you're in the market, the more you're gonna win. And I know what you're thinking. It's like, but Kris, what if I buy real estate and the prices go down? First of all, that ain't happening for the next decade because of all of the homes that we're missing. If you understand the Kondratiev or K-wave cycle, you basically start to understand that this is about supply and demand. And right now, because we're missing millions of homes, we have to satisfy that before the real estate market can actually have a downturn, which means you're gonna be waiting a very long time. Where we're getting confused is when we're thinking about the stock market, where it has a correction on average every 7 years. So like, oh yeah, that market, it's unpredictable. The smartest people don't know how to play it. It goes up, it goes down. Guys, that's not real estate. Don't confuse the real estate market with the stock market. When they say the market, that doesn't mean the real estate market and the stock market, but that's what most people do. So while most people are scared or they're trying to time the market, they're getting left behind. Don't get left behind. So like I said from the beginning, you should always be buying real estate. And right now there's 4 things that you should be doing right now if that's true. The first thing you need to do is you gotta get in the game and you gotta do it the right way, which means you gotta have the right mentor, you gotta have the right strategy. Like, don't just buy real estate, buy something that makes sense. And don't buy on like, oh, my neighbor said that the Airbnb they bought has worked out so well. Go find someone with extreme experience. I mean, I'm a little bit of an extreme mentor because I've done $2 billion worth of transactions on thousands of deals. But there are people out there and you want to find those that have a track record. Number 2, buy your first property. Literally start experiencing time in the market. Just make sure it's the right property. Number 3, once you own property, which you might already, there's equity built up in it. You should be getting a home equity line of credit, or you should be doing a cash out refinance, or even potentially selling the property to pull out all of your gains and put it into multiple new properties. And step 4, finally, you do this over and over again until you've built up a big enough portfolio. For my wife and I, 25 homes after 5 hard years of work meant $12,500 residually that we didn't have to work for. And then we thought it might be fun to own 100 properties or then maybe 1,000 properties. And because it worked, we just kept going. You always want to keep going. I hope that you're deciding to get in the game. But if you're still a little nervous or maybe scared or wondering how to do it the right way, you can click the link below and I can show you how to get in the game. In fact, if you want, I'll even take you by the hand and I'll do it with you so that you don't have to be alone. What I'm most well known for is building real estate portfolios with people that enjoy my content, they enjoy my track record, they see what I've been doing the last couple of decades, and because they want to win at the highest level, they play with the person who is playing at the highest level. Click the link below, learn about partnering with me, get in the game right now. All right, I get it. I talked about buying the right property, and you might be wondering, I think Kris means something very specific by that. And you're right, because I hate most real estate. There's just a tiny little niche that I love so much I'll do it over and over and over again because it makes me more money than anything else. And if you want to know what the right real estate is, click right here and let me show you.